but also our next guest can perhaps comment on it as
Squawk
well.
more zone.
The U.S. economy did grow at a much stronger than expected pace in the second quarter, powered by a turnaround in the trade balance and renewed consumer strength. That from the first read of Q2 GDP. Joining us now with the first reaction from the White House is the National Economic Council Director, Kevin Hassett. Kevin, good to have you this morning. Obviously, a nice GDP number. I'm curious as to get your thoughts in terms of what it means and what it says about our economy right now.
You know, I think if there were a beauty contest for GDP releases, that this July would probably be very close to the top of the list of the early betting, because it got everything for everybody. There's really strong growth, really strong income growth. We've got a huge reduction in government spending, 5% drop in government spending, now 70,000 fewer federal employees. And we've got $127 billion in tariffs. And so the story, the anti-Trump story, has been that we're going to have a recession or a depression because of the tariffs, which are going to jack up prices and cause consumers to run for the exits. And in fact, every single thing about this GDP release has shown strength. And then the final thing that I like to see in the release, and this is why I'm saying it's really a beauty contest level release, is if you look at it, if you then say, oh, well, next quarter is going to even be better than this, are there reasons to think that? And there are, because if you look at one of the weird little blips in the data, there was a big decline in, say, factory spending. And that was ahead of the big, beautiful bill because people were waiting for that to pass so they could expense. And so there's going to be a huge pent-up demand for factory spending in the third quarter. And so you got to be starting to pencil in a 4% number for that quarter.
Bonus depreciation potentially benefiting on that front, of course.
Sure.
Well, listen, my colleague Jim, and I'm sure he's got questions on it, though, seems to be somewhat concerned about the consumer. You know, we focus a lot here at CNBC on earnings, and we have seen some earnings reports that may be pointing to some weakness, Kevin, and perhaps starting at least to feel some impact from the tariffs, though not much. I mean, I am curious as to whether you find that a concern at all.
Right. Well, what we're seeing right now, right, is that the price of imported goods has dropped a lot, which is exactly what has to happen if we think that foreign producers and foreign governments are bearing the cost of the tariffs. And so it's not showing up in the data that we're seeing. And the bottom line is that we highly, highly are confident, as we saw in this release, where personal income grew, real income grew by 3%, that wages are going to grow a lot faster than anything that happens to prices. Prices are not going to be inflationary. Right now, core PCE is only at 2.1%, one of the biggest drops in a GDP release ever. And so, of course, you know, it's a thing to be watching, what's happened with prices, but we're really, really excited about what's going on with wages, confident that real wages will be higher, and that's great news for everybody, for people and for retailers and for savers and so on.
All right, so Kevin, this is Jim. I do agree that with the president that the number is way better than expected, but I point out that yesterday, Stanley Black & Decker, terrible number. Whirlpool, terrible number. PayPal, not a good number. These are consumer, all three of them, but particularly Stanley and, particularly Stanley and Whirlpool, they are housing. And then we got the pending numbers today, and they were not good. How are we going to get housing going here?
Right. Well, you're right to point to the one thing. If you look in the numbers, one of the points of weakness in the numbers was construction spending, and it was construction pretty much all around. And I think that a huge amount of it was related to people waiting for the passage of the big, beautiful bill. The bottom line is that if you're building multifamily housing, then you're going to get a much better depreciation. If you're building a factory, you're getting 100% expensing. And so there's a lot of reason why I think that the construction projects held up for a little bit. And so that means if you don't have a new home, you're not buying a washer machine. If you're not really running out to build the homes, then you're not buying Stanley products, where that's pretty much everything you need to build a house. And so we expect all that stuff is going to lift off now that the big, beautiful bill. In fact, it's lifting off already.
All right, so those of us who started out, we know that the rates were high, but we were able to get a teaser rate. Right now, because of where the rates are, you can't get that teaser rate. Is there any way to make it so that we get a teaser rate to get people and get this housing market moving without cutting rates?
Well, you know, as you know, the Fed is meeting this week. I think they're very data dependent. We at the White House 100% respect their independence, but we also like to respect their analysis. If you look at the numbers, then absolutely we're at core today is at 2.1. And we've got supply side stuff which drives down prices. And so we expect that the Fed will catch up to the data soon, and that's going to be a really big positive story for homeowners.
And it's your belief, ultimately, and the Fed today is probably going to not lower rates, in part because of the continued concern that over time we will start to see the impact of these tariffs in terms of what the consumer is paying. You simply don't believe that will be the case. I mean, Kevin, there's a belief that once we see things settle out and companies have a sense in terms of their margins and everything else, that prices will rise, if not already are rising. You don't believe that?
Well, prices have been falling month after month, and the CPI has surprised on the downside 5 months in a row, while everybody's, wailing, or shall I say, squawking about what's going to happen to prices. The bottom line is that if you have an inelastic supply, then the supplier's got to sell his stuff, and the way he sells his stuff is that he eats a lot of the tariff, and that's what we're clearly seeing in the data. Again, think about this really blockbuster GDP release with massive income growth and $127 billion in tariffs, and we cut 70,000 federal workers. And so everything that Donald Trump is saying about how you make America great again is proven true in the data. I think it's a really exciting day for America to see this GDP release.
Is the revenue coming in? Is the revenue coming in from tariffs important in terms of deficit reduction? Given, of course, we had independent agencies that said the big beautiful bill was going to be a huge deficit producer.
Yeah, absolutely. It's going to. The CBO put out an estimate of the stuff before we started to make these incredible deals, the best trade deals anybody's ever seen. That even before they came out, the CBO told us that we were looking at about $3 trillion more revenue from tariffs than they included in their score for the big beautiful bill. And actually, that number is going to have to go up quite a bit, depending on the final deals that we're making. But as you've seen, we've taken, about 40% of our imports and put a 10 to 15% tariff on it. And everybody's lining up to take a deal like the European deal and the Japanese deal. And be mindful of the fact that this is the kind of thing that Jim is so aware of, that they've also agreed to spend between Japan and the EU $1 trillion in America with capital formation. So we're having a capital spending boom, which is exactly the sweet spot for really high growth and low inflation, job creation, high wage growth as well.
All right, so Kevin, I see the president just slapped a tariff rate of 25% on India exports. I'm not a free trader. I don't believe it. I'm a fair trader. Can I just ask you, does India buy anything from us?
Their tariffs have been so high on us that there's not a heck of a lot of trade. That's right.
Well,
it's a very asymmetric situation. I think that we're hopeful that India will open up its markets to us. That's the really big headline, I think, of the EU deal and as the Japan deal and the other deals in Asia, is that they're opening their markets up to our farmers, to our producers, to our small businessmen who can now sell their stuff there without lots of red tape. And if we could do that in India, that would be an absolute game changer for the global economy, because it's such a large and growing economy.
Absolutely.
All right, Kevin, we got to leave it there for this morning. Appreciate
Thanks,
it.
guys.
Thank you.
Great to see you.